Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you are definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about US30. Now, as usual, first I'll give you a complete multi-time frame top-down analysis, and then I'll speak about some other important metrics like global liquidity, and then I'll put together all these different types of analysis. So this is definitely something you do not want to miss. Now, starting here from the monthly time frame, the first thing that we have to keep in mind is that at the moment we are in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows. It is very clear that we are in a strong uptrend, and most importantly, we have to keep in mind that we are now in the impulse phase of this uptrend, because every time you're seeing a market go up, obviously every uptrend is composed by a series of impulses and corrections. Now, you always need a correction in order to continue higher, because if a market is not creating a correction and is just going straight up, then obviously very soon it will become overextended to the upside. But at the moment, we just started the impulse phase. The market just broke above the previous high with just the last two candles. So in a situation like this, there is definitely room for this impulse to continue before then we are seeing the correction and the continuation of the uptrend with the creation of new monthly higher highs and higher lows. So here in the monthly, everything is very clear. We are still in the impulse phase. Let's keep that in mind and drop down on the weekly time frame. Now, from a weekly perspective, the higher highs and higher lows created in that monthly uptrend, because on the monthly, all this push to the upside is just green candles, right? We only see green candles in the push to the upside. Obviously, when you drop down on lower time frames, what you see is more granularity in the amount of data that you have, because you see more candles, and therefore here it is easy to notice how actually this push to the upside is composed by this series of impulses and corrections. And also here on the weekly time frame, we can notice how the last push to the upside was actually the creation of a new weekly higher high after the retest of this previous weekly resistance, now turned support. Because in an ideal uptrend, what you actually expect is higher highs and higher lows, but every time you're expecting the market in an ideal uptrend, so in an ideal situation, kind of what you see in the textbooks, what you expect is the market every time testing exactly the previous high. So in a situation like this, that is exactly what happened. We had the previous high here, the market broke above, retested the previous resistance, turned support, just created a new higher high. So in a situation like this, what you expect is, again, for the market to go and test the previous high. So now this new high, so this new previous resistance turned support. And then you expect the market to reject this level to the upside. So the market to complete this weekly impulse correction and impulse pattern to the upside. Just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. Let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. We have a market which created this W formation. Now, as I explained many times, when you see the creation of a W formation, there is an increased probability of the market going and completing the W at the neckline before then continuing higher. That is what you expect. The normal development after W formation is the completion and continuation to the upside. And that is exactly what happened here. In fact, we had the W formation, then it completed at the neckline, and right now it is continuing higher. Now, what is the psychology of this pattern? Well, when you see a pattern like this, usually it means that a lot of traders got trapped in sell orders, because you have the impulse, the correction, the market starts going lower, a lot of people start entering shorts, And at that point, if retail traders are entering shorts, most of the time they have their stop losses above the high. So if then the market goes and triggers all those stop losses, they all get liquidated by their positions. And that is what institutions can use to actually take the opposite side of the trade. So at that point, the market corrects to the previous resistance turns support, which then acts as support and the market continues higher. And you will see this happen over and over again. I'm sure you have already seen this in the market. It's not every time, obviously, but when there is such pattern, there is an increased probability of seeing this development, which in this case is exactly what happened. Right now, also here on the daily, we're seeing new structure being broken. This is previous daily resistance and supply from which all this rejection to the downside was created. Again, here we have supply and resistance at this area from which the rejection lower was created. Right now, the market broke above that zone. So this previous resistance is now turned support here. So there is an increased probability to see the market go and retrace to this previous resistance turn support. And when there is a retest of previous resistance turn support, there is increased probability of seeing institutional longing inside of this area, especially if the fundamentals of the market are strong. Speaking about fundamentals, indexes like the US30 tend to have a quite reactive behavior to the global liquidity index. Now, if we adjust the index, which is this yellow line you see right here, to essentially show mostly the M2 money supply, which is the thing that it reacts to the most. This is basically the money that is sitting in bank accounts, easily withdrawable things like money market funds and stuff like that. So it is a clear it is a clear index of what is this liquidity situation around the world. Indexes like the US30 are very reactive to such a metric. And what we can see right now is that clearly the M2 money supply is in an uptrend, and it seems like it is ready for the next leg higher from here. Now, if that will be the case, if from here the M2 money supply will continue higher and create new all-time highs, there is a good probability that the US30, especially if it will retrace to this area, could see strong institutional buying, pushing it even higher and continuing its correlation with the M2 money supply index. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with other important fundamental metrics like the M2 money supply, those are the best indicators when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So Basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.